Every government on Earth operates under a mountain of debt. The United States national debt alone is nearing $38 trillion. European nations, Japan, even resource-rich Gulf states, they all owe colossal sums. This debt figure is so enormous, so abstract, that it ceases to feel real. It just becomes background noise. But here is the single, fundamental financial paradox that the world's elite hopes you never truly understand. If every major nation is the debtor, who is powerful enough to be the creditor? The official answer is confusing, intentionally so. The real, shocking truth is that the world's colossal debt pile is not owed to a single alien superpower or a shadowy council of billionaires. It is owed to a machine, a perpetual motion device that transforms future promises into present-day liquidity. The debt is real, but the creditor is the system itself. The ultimate lesson of the $38 trillion paradox is this: global debt is the foundational currency of the 21st century, and it is designed to transfer wealth, not to be repaid. This is the unfiltered truth, the history they hide, the mechanism that makes your taxes and your paycheck less valuable every single year. Before we follow the paper trail that exposes this global architecture, tell me, where are you watching this analysis from? Drop your city in the comments and hit subscribe now, because understanding the creditor changes the entire game. To unravel this mystery, we must start with a simple question. How is a nation's debt created? It's created by issuing bonds, specifically government bonds, or treasuries in the U.S. When the U.S. government needs money to pay for roads, defense, or stimulus, it doesn't just print cash, it sells a promise. A treasury bond is essentially an IOU. The government promises to pay the face value back in 10 or 30 years, plus regular interest payments in the meantime. The sale of these bonds funds the government, but the act of buying the bond creates the creditor. So who buys these bonds? The answer is intentionally complex, but we can break the $38 trillion U.S. debt into three major segments, revealing the illusion. Let's start with segment 1. The government itself. This is the internal illusion. The first major holder of U.S. debt is the U.S. government. Yes, you heard that right. This is debt the U.S. owes to its own agencies. Think of the Social Security Trust Fund, the Military Retirement Fund, and other government accounts. These funds are legally mandated to invest their surplus cash into Treasury bonds. When Social Security buys a Treasury bond, the U.S. Treasury receives cash, and Social Security receives an IOU. This debt is legitimate, but it represents an internal liability, a promise the government makes to its future self. It's not owed to an external entity, but it's a massive future burden. This segment makes up about 25% of the total debt. Next is segment 2, foreign governments. This is the geopolitical leash. The second major creditor is foreign official institutions, the central banks and sovereign wealth funds of other countries. At its peak, nations like China, Japan, and European allies held over $7 trillion in U.S. treasuries. Why? Because the U.S. dollar is the world's reserve currency. If a country like China wants to trade globally, they must hold dollars. The safest place to put those excess dollars, earned from exports, is back into U.S. Treasury bonds. This is the ultimate dollar trap. Foreign nations are forced to fund the U.S. government's debt just to participate in global trade. This debt is a geopolitical leash, giving countries like China leverage over U.S. financial stability. However, this is the segment that grabs headlines, yet it's often the smallest portion of debt sold to the public. And that brings us to segment 3, the most crucial, least understood, and largest creditor, domestic institutions. This is the circular wealth transfer. This is the financial ecosystem of America. This includes the Federal Reserve, the manufacturer of our money. The U.S. central bank buys massive amounts of treasuries using quantitative easing, essentially creating new digital money to finance the debt. The Fed is not just a lender. It is the primary manufacturer of the lending capacity, It also includes pension funds and mutual funds, your 401k, your retirement fund, your insurance company. They buy treasuries because they are legally required to hold safe assets. This loop, the government issues the debt, the Fed prints the money to buy it, and your pension fund holds the asset, is the core of the paradox. The country owes debt, but the interest payments on that debt flow upward, from the general taxpayer to the financial institutions and the wealthiest individuals who own the bonds. This is not a conspiracy. It is a structural design. The debt is the ultimate tool for wealth transfer. It ensures that the middle class pays the interest, and the financial elite collects it. This structural design began not in the 2000s, but with the fall of the gold standard. Before 1971, the government couldn't print money endlessly because the dollar was technically backed by gold. The gold was the leash. When President Nixon completely ended the dollar's link to gold, the Nixon shock, the government was finally free. The debt became backed by nothing but the full faith and credit of the U.S. government. A promise. Sound familiar? Once the gold leash was broken, the debt machine was unleashed. The constraint was gone. The U.S. government could now fund its deficits by issuing unlimited bonds, knowing the Federal Reserve could always step in to buy them, thereby creating money out of thin air. The financial lesson is simple. Debt is the new money. Every dollar created since 1971 is fundamentally an IOU of the U.S. government. The real goal of this colossal perpetual debt is not to be repaid. It is to be refinanced forever. When you take out a 30-year mortgage, you intend to pay it off. When a government issues a 30-year bond, it plans to issue a new 30-year bond right before the old one matures, using the new debt to pay off the old debt. Economists call this rolling over the debt. The moral hazard is profound. The U.S. government knows that if it ever actually tried to pay off the $38 trillion debt, it would trigger global financial chaos. The financial markets need U.S. treasuries to function. They are the benchmark for global interest rates, the safest collateral for derivatives, and the primary asset held by central banks. If the U.S. paid off its debt, the world would lose its anchor. The supply of the world's most trusted asset would vanish. The system would collapse under a deflationary shock. Therefore, the system is designed to be unbreakable only if the debt remains in place. The continuous issuance of debt is the heartbeat of global capitalism. Here's a shocking statistic. The U.S. national debt is increasing by approximately $1 trillion every 100 days, a rate that makes any talk of paying it down a statistical impossibility and a political deception. Another one. The amount of debt held by the Federal Reserve itself, money created through QE, exceeds $7 trillion, making the Fed the single largest monetary creator of U.S. sovereign debt. The greatest risk, however, does not come from the official $38 trillion debt. It comes from the shadow debt. The official number is manageable, but lurking beneath are the unstated off-balance sheet liabilities that truly threaten the system: derivatives. Derivatives are complex financial instruments, essentially bets, that derive their value from an underlying asset, like interest rates or currencies. The global derivatives market is estimated to be over $600 trillion in notional value. This debt lives primarily in the unregulated shadow banking system. This vast, interconnected web of bets and liabilities is often backed by U.S. Treasury bonds as collateral. If confidence in the dollar or U.S. debt wavers, if the primary anchor begins to drag, the entire $600 trillion derivatives market risks freezing up. This is where the real systemic risk of the global economy is hidden. Sound familiar? This massive invisible liability makes the official debt look like a simple accounting error. The history of debt, from 1694 to today, reveals a pattern of engineered inequality. The system is built on greed and the premise that the powerful are never forced to pay the ultimate price. The debt is the ultimate financial mirror. The world is indebted to itself, but the financial architecture ensures that the wealth created by that debt flows relentlessly to the top. The interest payments you cover with your taxes become the tax-free security of the wealthiest institutions. The only thing that can break this machine is a loss of confidence. When the world stops believing that the United States will be able to service its debt, to pay the interest, the cycle breaks. Interest rates spike, bond values collapse, and the entire edifice of $38 trillion collapses under its own weight, dragging the $600 trillion shadow market with it. Consider this shocking statistic. The interest paid on the U.S. national debt alone now approaches $1 trillion annually, a cost that exceeds the entire U.S. defense budget. This money is pure transfer payment to the creditors. And another, the U.S. has lost over 30% of its global share of manufacturing output since 2000, creating massive domestic economic pressure that must be alleviated by running up more debt. The ultimate lesson of the paradox is a warning. We are required to accept the illusion that debt is normal and manageable. We are required to accept that the architects of this system, the central banks and financial institutions, are working for the public good. But while the $38 trillion debt grows, the wealth held by the top 1% of U.S. households has increased by over 40% in the last decade, proving that the debt machine is working perfectly for its primary beneficiaries. Ponder this. Are we wiser now, or just walking the same path in better suits? If you believe that this hidden architecture of global debt must be understood by everyone, share this video widely, expose this hidden truth to your network, and subscribe immediately so we can continue to unpack the hidden mechanisms that control your life and your wallet.